Day due to the Memorial Day holiday. I hope you and yours had a safe and enjoyable holiday break. Now that the futures trade is off and running, saw a little weakness last time we looked, and let's take a look together with Todd Horwitz from the trading floor this time. He's with BubbaTrading.com. He's speaking to us direct from Chicago. Todd, I want to have you walk along with me here as we walk through the prices, and I want to get your thought on what things are doing today. On the corn, let's take a look here. On July corn, we currently have it down 4 1/4 cents at 408.5 per bushel. December, the new crop month, down 1 3/4 at 411 3/4. Then on the soybean trade, here we have that July contract now trading at 1079.5 per bushel, so we're down 7 cents. That's the weakest of the batch. The November new crop soybeans down 2.5 at 1053 3/4. And on the wheat, this is the one that really made a dramatic turn last half hour. July Chicago wheat currently down 12 3/4 at 468 3/4. That's almost 3 cents off of our low now. Kansas City wheat has July now trading down 8 1/4 at 451.5. And we'll throw in the Minneapolis spring wheat trade, no extra charge. July down 6 at 522 per bushel. What in the world here, Todd, happened to the wheat market here about a half hour ago?
Well, Marlon, I think really what you're seeing here is markets that are pretty much range-bound in wheat. If you go back and look at a longer dated chart, you're going to see that wheat's been really between 460 and 490. We got as high overnight as 483 3/4, and now they're taking some profits. Again, I'm firmly expecting to see 455 or 460, at which point I'd want to step in and be a buyer again. This range has been about as automatic as you can ask for from a trading standpoint. I know it doesn't make the farmers and producers happy because obviously we'd like to see them just trend higher and go up. But right now, this market continues in what we would call a wicked consolidation pattern. And every time it looks like they're getting ready to break out, they break down. Every time it looks like they're getting ready to break down, they break back to the upside. And again, you go back 3-4 months, you can see this exact pattern developing. Now, I think we'll see much better prices in the future. But overall, in this particular pattern, I think we stay in this range that we're trading right now. And I think that's going to continue.
All right. So now as we look at what's going on in the overseas markets today, and I did want to point out, too, we can't forget crude oil is knocking on the door of $50 today. Is any of that going to have an impact here on the grain trade from outside our borders here?
I don't think so, Marlon. I think here's what the way that I foresee it and what I'm looking at, okay? First of all, let's look at soybeans. We had a big squeeze into what we would call the silo squeeze into the July. That may now be over, and I'm looking for some lower prices here because I believe that we're going to go lower. Now, again, overall, I'm very bullish. I want to be a buyer, but I want to be a buyer at better prices. And I think we got a little bit too far ahead of ourselves. We had basically a meteoric rise to the upside. I think you have to see some pullback here. I think you want to watch 1040 if you're watching July. I think we're probably going to see that $10 range come into play one more time before we start to turn them around. You've got a lot of factors this week that are going to play into the market. Number one, today, believe it or not, you've got the euro currency, which is the biggest component in the dollar index, with the dollar index both higher, which is very unusual. You've got Mario Draghi, who's going to control the euro currency on Thursday. You've got the jobs number on Friday. Those are things that are going to have a dramatic effect on the dollar, and the dollar, based on what the Fed's going to do, should go a lot higher here because if the Fed does raise, which they say they're going to, then we're looking back to 100 on the dollar index. So that tied in with a market that's already been well overbought, I would look for some selling. The same thing in corn. I think corn's got to come down to at least 395 before we can see a rally. I think really probably 380 to 375 is where I'd be looking. But again, I'm very bullish, and I think that the markets will work properly and we'll get enough cooperation from the outside markets that will make all these things very good overall. But to make them healthier and give us a more powerful rally, I think a little selling is due.
Wow, there's a lot at play. Thanks for explaining all that, Todd. Appreciate that. Quick peek at our cotton market, and then we'll take a break, and we'll talk with Todd about the livestock trade in a moment. In the cotton market, we have July down 61 points. New crop December cotton down 65 points at 63.20 cents per pound. As I mentioned, we'll be back in 1 minute. We'll talk with Todd about what's going on in the cattle and hog markets right after this.